Every single company that I own is down in the after hours. Look at Crocs, 1.3% down in the negative. Salesforce, my largest position, down 3.3% in the negative in the after hours. Amazon, an astounding 4.4% down in the after hours. And then the one that we're talking about in today's video, which is down the most of all, and it is my smallest position, but it's still going to be painful tomorrow when I wake up with this company already being down 6.6% in the after hours. This company is feeling a lot of pain. And the reason being is that this company just reported its earnings. And so we're going to go over in this video why this company dropped. Was it because of the revenue? Was it because of the profitability? Their guidance moving forward? We're going to just give a brief overview of the company's earnings and what I plan on doing moving forward. Because I have these really big spreadsheets where I track all these different metrics for my companies and I give my projections. And the cool part is that if you look at these earnings estimates, if you look at the numbers that they just came in with, they're actually almost perfectly in line with the estimates that I have come up with over the last several months. And these numbers, which we'll be going over here in just a second, is pretty much just in track with what we came in about. So guess what? I'm not really too upset. I will like to see these numbers improve over the next coming years, but we're going to talk about in this video why it's not the end of Google, why it's not a company that you should sell out of, and then we're going to give some brief overviews for why I think this company did have a negative earnings report and what I think it'll look like next quarter and more importantly moving into 2023. If you haven't seen me before, my name is Jordan, I'm a millennial investor, and I have my YouTube portfolio where I share the balance at the first of the month every single month and every single video, which you can see right here as of the time of me filming. I have some good news. Today is the highest portfolio balance that I've ever closed at. I have never closed above 43,900 and here we are. So today is a record number. The bad news is tomorrow this is going to go down significantly if these earnings continue to hold up the way that they're looking. But I'll also show my performance since joining this brokerage, as you can see right here. And I also shared down below in my description my portfolios hand in hand, my growth and dividend growth portfolio, which shows all of the holdings that I'm invested in or recommend buying, and that is shared down below in the description, which is right here. And you can get signed up with M1 Finance, which gives you $10 for getting signed up, and you'd help support me in the channel. So thank you guys so much for tuning in, and without further ado, let's go ahead and take a look at Google stock. It had a good day today. Before the after hours, it was up almost 2%. And over the last week, it's done well. It's up 2% again. And over the last month, it's up about 4%. And it's finally starting to see a recovery from this big drop we've seen over the last year or so in this recession. Now, over the last year, it's down 25%. Year to date, just since January 1st, it's down almost 30%. After the earnings report today, we'll likely see a negative 30-something% number after the big drop we've seen today. And it will likely hit new lows from where we've seen at the beginning of the year. And I think the lowest we've seen so far for the 52-week low is around $95, $96. And based on where we're at in the after hours today, it's currently trading at 97 and change. So we're right near that all-time bottom for the year of 2022. Now hopping over here into my spreadsheets, you can see that my performance hasn't been bad, and Google is a small percentage. It is a smaller part of my portfolio, and of the four in my growth stock portfolio, it is the smallest. It only makes up about 13%, and after tomorrow, probably even a smaller percentage, but this company does have a lot of upside in my opinion. And I think that these numbers do not indicate how high quality of a business this is. Now this shows the quarter over quarter numbers for everything related to Google. Their Google search and other did report some growth year over year. YouTube ads actually shrunk. Their YouTube business actually went down year over year. Google Network also went down slightly. And the only thing that's really posting growth is two categories. Google Search, their main core business and where most of their profits come from, and then really Google Cloud. That's where the bulk of the revenue growth came from this quarter, and then their profitability year over year was not very good. Last year, in this quarter, it was $21 billion in terms of its operating income, and this quarter it was only $17 billion. Now hopping into Qualtrim here, if you look at their revenue, they reported a total revenue number of a little over $69 billion. Now that is near its all-time high, and that does represent a 6% growth number. Now the funny part is that if we hop over here and we look at my Google section, we can look at my spreadsheet and I have my estimates for 2022 and beyond. And I have this company growing at a compounded annual growth rate of about 6%. As you can see from this little chart right here, I project 6% growth between now and the next 5 years. Which is funny because that's right where we grew at 6.1%. This is actually a teeny tiny bit ahead of my estimates. Now the next part, revenue growth is great. That's really important. I project that they'll finish out at $200 273 billion. So far throughout the last 3 quarters, we're on track to hit that. We're right in line. This company, as of right now, sits at around, 205 billion. So we're on track to likely hit this number, if not exceed it. As long as the fourth quarter is even remotely decent, it'll be really close to this, I think. Now, the free cash flow conversion of 21% is also right in line from what I've projected. If you look at these numbers, if we go to the free cash flow margin, you can see in the first quarter they did 22.5, the next quarter they did 18.1, and this quarter they did 23.3. If you take the average of those, the free cash flow margin so far this year has been 21.3%, which is slightly above my free cash flow conversion estimate for the year of 2022. And the free cash flow of 57 billion is pretty much on track from what we see so far. Now, it was down year over year quite significantly of negative 14%. But notice that this is right on track because I projected this downturn to happen already. If we look on a year-over-year basis, if we pull up the annual charts here for the free cash flow, you can see that last year we did 67 billion. Now, I'm not projecting 67 billion this year. I'm projecting a $57 billion this year, and I project it to increase over the next coming years. And as over time goes, you notice that the share count goes down, which they're doing very well. They're buying back lots of shares. If we look over the last quarter, you can see that this company bought back a pretty significant amount of shares. Just in the last quarter, you can see that they bought a pretty significant amount, down from 13.133 to today's 13.018. So that's a pretty substantial number down. And if you pull out your calculator and you actually add that up, you can see that the company bought back right around 115 million shares just in the last 90 days. So that's great to see, and that represents a negative share count growth of 2.2%, which is perfect. You want to see a negative number for shares outstanding. You want to see the number go down. Now, the one thing I didn't like is that if you look at the debt pile, it did increase, and meanwhile, the cash pile actually went down. So they did burn a little bit of their cash, but that's not really a problem because when you compare the red versus the green, the cash versus debt pile, it's not even close. And it's easy to look at this and say that, okay, we see that the New York Times is writing about Google going down in ad revenue, and I think that that's not a bright spot of the quarter. It's not one that I like, and I do think that as it talks here about it's facing increasing competition from TikTok and other ad platforms, I think that it is a concern to see YouTube slowing down. But the good news about this company is that its core business is still growing, albeit it is slow. It is growing somewhat. If we go to their quarterly revenue growth here, and we see that the company overall grew about 6%, but just the actual search, just the search business itself, still grew about 3% year over year. Not very high, not as much as I'd like, and the revenue for the YouTube business did go down 2%, which cancels each other out pretty much. But you see their Google Cloud growth is still growing an incredible 37% year over year. You can see last year during this time they did 4.99 billion, and this quarter they eked out 6.86 billion, which is a huge uproar. And you can see at the profit margins as well for the Google Cloud is finally starting to improve. While it isn't great, it did produce the smallest loss that we've seen pretty much ever since this business segment has been in existence, at only negative 10, which isn't great, I know, but considering that last year it was negative 13, that's a lot better, and this company is scaling a lot faster. So overall, with Google going down after hours, I see it as a buying opportunity. I don't know if I'll be adding into my position, as I typically buy in multiples of 100 shares for option selling purposes, but it's easy to look at this YouTube number and get discouraged. And the one thing that I am a little concerned about, and I'm not really sure how to approach, is the increasing employee number, which is growing rapidly. It says that it has 186,000 employees and change, which is an increase of more than 12,000 just from the numbers reported in July. Just a few months ago, 12,000 employees extra were added onto this company's portfolio of employees, and I think that is a little bit questionable considering that we're going into a recession. Revenue is slowing down, and I think we could potentially see the employee count go down because when this profitability year over year decreases $4 billion in a 1-year span, that typically catches notice of shareholders and the company's board of directors. So I don't know how much longer this hiring spree will last of Alphabet, last of Google, but as long as this overall trend of the revenue growth going up 6% or more, over the last 2 years it's up 25%, over the last 10 years it's up 17%. This is a long-term compounder, and while this quarter isn't very great in a recession, I am okay with it. The company still produced a pretty reasonable $16 billion in free cash flow, and I think that it will hit right on track from all these estimates that I have, which are right here. And if they do, I think that it will make a pretty reasonable investment, and I think it'll give me lots of opportunity to invest into the upside. But thank you guys so much for watching. If you appreciate this, I'd hope you subscribe down below. Check out everything down below in the description. Get signed up with M1 Finance for a free $10, and I'll catch you guys next time.